All right, so let's get right into it. The European Central Bank, they are in a really tough spot right now. We're talking about a huge geopolitical crisis that's basically backed them into a corner. And at the same time, you've got the financial markets making this massive trillion-dollar bet on what the ECB is going to do next.
So, picture this. You've got the Strait of Hormuz. I mean, this is a critical waterway for global energy, and it's pretty much paralyzed. And what happens when that closes down? Well, energy prices are just soaring. This is sending huge shockwaves through Europe's economy, which, was just starting to feel a little bit better. Things are tense, the stakes, they're incredibly high.
So that really sets the stage for our first section here. We're going to look at how this crisis has turned into a giant bet in the financial markets, a bet on the entire future of Europe's economy.
And the pressure isn't just coming from the outside. It's building from within the ECB itself. You get comments like this one from a top official, Peter Casimir, and it just fans the flames. I mean, when a guy like that says they're prepared to act, you better believe the market listens. And they hear one thing, rate hikes. They see it as a clear signal that the ECB is getting ready to fight inflation.
And what does all that talk lead to? Well, it leads to this, 70%. Just let that sink in. That is the chance the market is giving for a rate hike by the ECB by July. It's a massive all-in bet that the ECB is going to fight inflation no matter what it costs the economy.
But, and this is the big question, right? Is the market right? Have they maybe gotten a little ahead of themselves here? To figure that out, we can't just look at the scary headlines. We need to dig a little deeper into the ECB's own playbook.
So if you really want to get inside the head of ECB President Christine Lagarde and figure out what she might do, you have to look at their own homework, their emergency simulations. This is literally how they game out what happens to the economy in a crisis just like this one.
Okay, now this is fascinating. The ECB has already run the numbers on this. Way back in December, they ran what they called an extreme scenario. And look at the results. A 64% spike in energy prices, that would tack on almost a whole percentage point to inflation. But, and this is the key part, it would also chop off more than 0.5% from economic growth. This is the brutal math they are staring at right now.
And there it is. That right there is the classic stagflationary trap. It's a total nightmare for a central bank. What do? Do you jack up interest rates to fight that inflation, even though you know it'll probably wreck an already weak economy? Or do you try to save the economy and just let prices go crazy? There is no good choice here.
So when you see that trap, you kind of get why the market's betting on a rate hike. It seems like the only option to fight inflation. But, and this is the whole point of our analysis today, this time is different. This is not 2022 all over again. The fundamentals of the economy are just in a totally different place.
And this chart really shows you why. It boils down to two huge differences. First, economic demand. Remember 2022? Everyone was spending like crazy after COVID. That's what was pushing prices up. Today, the economy is fragile. There's no spending boom to worry about. And second, and this might be the most important part, look at interest rates. Back then, rates were negative. They had to slam on the brakes. Today, rates are already high. They're already restrictive. That completely changes the game.
Economists have a name for this. They call it a policy buffer. And the analogy of a race is perfect. In 2022, the ECB was at a dead stop. They had to floor it. Today, they're already cruising along. And that buffer, it gives them the one thing they desperately need, time. Time to wait, watch the data, and see what this energy crisis really does to the economy before they do anything drastic.
Okay, so what's the takeaway here? What does this all mean for us? Let's boil it all down into a strategic playbook. 3 key things to keep in mind for what's coming next.
All right, here we go. Point 1. You've got to accept a new reality where secure energy is king. Its value is just going to skyrocket. This is way beyond economics, it's geopolitics. Point 2. This crisis pretty much forces Europe's hand. Green infrastructure, I'm talking renewables, nuclear, the whole shebang. It's not a nice to have anymore, it's a national security issue. And finally, point 3. The big move here is to fade the July hike. What does that mean? It means you bet against that 70% probability. You bet the market is wrong and the ECB is going to hold off. The smart money isn't on a new hiking cycle, it's on a long pause, higher for longer.
So really, the main takeaway for anyone watching the markets is this. Treat the panic as a probable overreaction. The ECB knows full well that hiking rates into a weak, energy-shocked economy is just a guaranteed recipe for a recession, and they don't want that.
And all of this leads us to one final huge question. It's the multi-trillion-dollar dilemma that Christine Lagarde and the ECB are facing right now.
So, which way will they go?
Are they going to get forced into hiking rates just to fight this inflation coming from outside, even if it means killing the economy? Or are they going to use that policy buffer we talked about, hold their ground, and try to protect what little growth they have? The answer to that question is going to shape Europe's economy for a long, long time.